morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Thursday, January 2nd. I hope everyone had a very happy and safe New Year's. 2024 ended with speculative traders in a bit of a buying mood across the agricultural space as they were aggressive buyers on Tuesday, with prices ending the session at their highs during the abbreviated session. In total, we had them buying just over 11,000 contracts of corn that took their long position back up to about 190,000 contracts, which if realized would be the highest in almost 2 years. While in soybeans, we had them net buyers of just over 12,000 contracts. This cutting their short position now back under 50,000, which would be the smallest since October. No trade overnight due to the New Year's holiday. Prices appear right now that they're coming in a little bit mixed here following Tuesday's nice rally. A big contrast in weather conditions across South America that continues to exist. Central and northern portions of Brazil expected to see frequent rainfall, keeping cropland areas here wet, in some cases excessively wet, while in the south and in Rio Grande do Sul, and that stretches into central parts of Argentina, little rainfall is expected over the next few weeks. As temperatures heat up, soil moisture is quickly being depleted, which will continue to raise stress levels on developing crops there. We do expect an update from the Buenos Aires Grain Exchange later today with updates on Argentine crop conditions and perhaps production estimates as well. Also, after today's close, we'll get an update, some usage numbers on census crush from the month of November, which is expected to fall to about 206 million bushels versus the all-time high of 216 back in October. However, if this 206 million figure is realized, it would be the second highest crush figure ever. Oil stocks are expected to slip to 1.420 billion pounds, down 4.4% from October, however, still the lowest in over a decade. We'll also get updates on corn usage for the production of ethanol from November, which is expected to be near a record high, as we've seen weekly production rates over the month also at or near record highs. Tuesday's EIA report did show bean oil used in the production of biofuels surge 14% in October to 1.227 billion pounds as processors geared up production rates here. The market still awaits to see if the Biden administration extends the biodiesel blenders credit before leaving office on January 19th. Also, some confusion coming out of Indonesia, as they apparently have yet to implement their higher blending rates up to 40% from the previous 35% in 2024. Palm oil prices were sharply lower here overnight, down 2.6% as a result. March corn will have support at its old high at 451 and a quarter, with next resistance at 468. March beans surged to a new monthly high late on Tuesday. Resistance above the market is at the 100-day moving average at 1019 and a quarter. We'll see if we do mount any challenge below the market at that $10 level. March oil continues to consolidate very close to 40 cents. March meal did surge also to a fresh 2-month high late on Tuesday, support below the market at its 100-day moving average at 311.20. And in wheat, we do have moving average resistance just above current levels here, 565 for both Chicago and Minneapolis, Chicago and Kansas City, 606.5 resistance level for Minneapolis. So thank you for listening, everyone. I hope you have a great start to the 2025.